Imagine owning shares of the world's most dominant companies at prices so low, it feels unreal. Right now the market is offering us that chance. These aren't risky penny stocks or speculative crypto coins. We're talking about established giants, fundamentally undervalued. Today I'll reveal 3 powerhouse companies, a global healthcare leader, a pharmaceutical titan, and a pioneer in cancer treatment, all trading at bargain prices. I'll break down why these stocks are so cheap, their massive long-term potential, and how you can get in before the crowd. This is the kind of insight that can change your financial future, so stick around. Smash that like button, share your thoughts in the comments, and subscribe for more investing updates. Let's start with Novo Nordisk, ticker NVO, a company that's quietly become a global powerhouse in the fight against diabetes and obesity. While many investors focus on flashier tech names, Novo Nordisk has been steadily building a healthcare empire, transforming millions of lives and generating impressive returns for shareholders along the way. Their flagship drugs, Ozempic and Wegovy, aren't just popular, they're fundamentally changing the way doctors and patients approach weight management and cardiovascular health. These medications have become household names prescribed by physicians worldwide, and are now seen as the gold standard for treating obesity and type 2 diabetes. Demand is so overwhelming that pharmacies can barely keep them in stock. Supply chains are stretched to the limit and patients are lining up, eager for access to these life-changing treatments. Novo Nordisk is racing to expand production, but the appetite for their drugs continues to outpace even the most optimistic forecasts. This isn't a passing fad. Diabetes and obesity are 2 of the most pressing health crises of our time, affecting hundreds of millions globally. Novo Nordisk has been tackling these challenges for over a century, building a reputation for scientific excellence, a robust patent portfolio, and a brand that patients and doctors trust implicitly. Recently, short-term worries about increased competition and temporary supply chain hiccups have caused the stock to pull back. Some investors are nervous, but these are the kinds of headlines that create opportunity for those who look deeper. The company's underlying business remains as strong as ever. Just look at the numbers. Novo Nordisk is posting double-digit revenue growth year after year, with expanding profit margins and a balance sheet that's the envy of the industry. Their financial discipline allows them to weather storms and invest aggressively in future growth. A big part of their success comes from relentless investment in research and development. Novo Nordisk pours billions into R&D, ensuring they stay at the forefront of medical innovation. Their scientists are constantly pushing boundaries, developing new therapies and improving existing ones. The market is barely scratching the surface when it comes to Novo Nordisk's pipeline. Beyond injectables, they're working on oral versions of their blockbuster drugs, which could open up entirely new markets. They're also exploring treatments for rare diseases and other chronic conditions, broadening their reach and diversifying their revenue streams. The global obesity market is still in its infancy, with billions of people at risk and healthcare systems desperate for effective solutions. Novo Nordisk is uniquely positioned to lead this market for decades, thanks to their experience, scale, and relentless focus on innovation. Market pullbacks are a natural part of any long-term growth story. They shake out the weak hands and create attractive entry points for patient investors who understand the company's true potential. Right now, Novo Nordisk is trading at a valuation that doesn't reflect its dominant position or its future growth prospects. For value-oriented investors, this is a rare opportunity to buy a world-class innovator at a discount. Demographic trends are only adding fuel to the fire. Populations are aging and obesity rates are climbing in both developed and emerging markets. These are powerful, long-term tailwinds that will drive demand for Novo Nordisk's products for years to come. The company's management team is widely respected for its vision and execution. They've navigated regulatory hurdles, competitive threats, and global crises with skill, always keeping an eye on the long-term horizon and investing in the future. While retail investors chase the latest trends, institutional investors are quietly building positions in Novo Nordisk, recognizing the company's staying power and growth potential. Novo Nordisk isn't just another growth stock, it's a rare example of a quality compounder. Over time, the power of compounding returns can turn a good investment into a great one, especially when the underlying business is this strong. The company's core diabetes franchise provides a stable foundation, cushioning the downside. Meanwhile, the explosive growth potential in obesity treatments and new drug launches offers significant upside for those willing to look beyond the headlines. This is what investors call an asymmetric bet, where the potential reward far outweighs the risk. With Novo Nordisk, the downside is limited by their entrenched market position, while the upside could be transformative. Of course, you should always do your own research and consider your own risk tolerance. But it's hard to ignore the compelling case for Novo Nordisk at this moment in time. Novo Nordisk stands as a pillar of strength and innovation in the healthcare sector. Owning shares now could mean participating in the next era of medical breakthroughs and benefiting from the company's relentless drive to improve global health. If you're building a watch list of world-class companies, NVO deserves a spot right at the top. Don't let this titan slip under your radar. The market's hesitation is your window of opportunity. Take a closer look at Novo Nordisk before the next wave of growth leaves cautious investors behind. Next up is Pfizer, ticker PFE, a household name that's been crushed post-pandemic, but that's exactly why it's a bargain. While many investors have turned their backs on Pfizer after the COVID boom faded, this is precisely the moment when savvy, long-term investors should be paying attention. The market's short memory and focus on recent headlines have created a rare opportunity to buy a world-class pharmaceutical giant at a steep discount. The market's fixated on declining COVID sales, ignoring Pfizer's massive, diversified portfolio and robust pipeline. The stock has been punished for the drop in vaccine revenues, but that's only one chapter in Pfizer's story. Investors are overlooking the company's deep bench of innovative medicines, its global reach, and its ability to generate cash flow from multiple sources. This is a classic case of the market overreacting to short-term news and missing the bigger picture. Right now, Pfizer trades at a rock-bottom valuation and offers a dividend yield far above treasuries. You're getting paid to wait. With a yield that's among the highest in the S&P 500, Pfizer rewards patient investors with steady income, even as the market sorts out its next move. This is the kind of setup that value investors dream about, a blue-chip company, temporarily out of favor, but still generating real cash for shareholders. The COVID cash windfall wasn't wasted. Pfizer acquired 𝗟𝗓𝗏, doubling its oncology pipeline and securing new growth drivers. This bold move signals that Pfizer isn't just sitting on its hands, it's actively investing in the future. The 𝗟𝗓𝗏 acquisition is a strategic bet on cancer therapies, one of the fastest-growing and most lucrative areas in medicine today. The 𝗟𝗓𝗏 deal brings in approved cancer drugs and a promising pipeline, offsetting the COVID revenue drop. These aren't just experimental treatments. 𝗟𝗓𝗏's portfolio includes drugs that are already making a difference for patients and generating revenue. With this acquisition, Pfizer is positioning itself as a leader in oncology, a field with enormous potential for growth as new therapies come to market. Beyond acquisitions, Pfizer's R&D engine is launching new vaccines, cancer drugs, and treatments for inflammatory diseases. The company is investing billions in research and development, with dozens of programs in late-stage trials. From next-generation vaccines to breakthrough therapies for rare diseases, Pfizer's innovation pipeline is robust and diverse, setting the stage for future growth. The market is assigning almost zero value to this pipeline, a huge mistake. Analysts are so focused on the decline in COVID sales that they're ignoring the value of Pfizer's future products. This disconnect between perception and reality is where opportunity lies for investors willing to look beyond the headlines. Core franchises like Eliquis and Prevnar continue to generate billions in stable cash flow. These blockbuster drugs are the backbone of Pfizer's business, providing reliable revenue streams year after year. Even as the company invests in new areas, these established products ensure that Pfizer remains financially strong and able to weather industry cycles. Management is cutting costs, securing the dividend, and likely to initiate buybacks after integrating acquisitions. The leadership team is laser-focused on efficiency, making sure that every dollar is put to work for shareholders. By streamlining operations and prioritizing shareholder returns, Pfizer is setting itself up for a more profitable future. The risk-reward is compelling, limited downside at crisis-level prices, with substantial upside if the market re-rates the stock. At these levels, much of the bad news is already priced in, creating a margin of safety for new investors. If Pfizer executes on its strategy and the market recognizes its true value, the upside could be significant. Pfizer's global scale means it can commercialize new drugs faster and more effectively than most competitors. With operations in over 100 countries and a vast distribution network, Pfizer has the reach to bring new therapies to patients around the world quickly. This global presence is a major competitive advantage, especially as the company rolls out new products from its pipeline. The 𝗟𝗏𝗏 acquisition is a game-changer. Pfizer's reach will accelerate sales growth for these innovative cancer therapies. By leveraging its sales force and relationships with healthcare providers, Pfizer can maximize the impact of 𝗟𝗏𝗏's drugs, bringing life-saving treatments to more patients and driving revenue growth for years to come. This is a classic contrarian play. Buy when sentiment is at its worst. When everyone else is running for the exits, that's often the best time to step in. History shows that the greatest investment returns often come from buying quality companies when they're out of favor, and holding on as the market's view shifts. The turnaround won't happen overnight, but patient investors are being paid handsomely to wait. With a secure dividend and a strong balance sheet, Pfizer offers both income and the potential for capital appreciation. This is an investment for those who understand that real wealth is built over time, not by chasing the latest fad. Pfizer has survived and thrived for over 170 years, always adapting and innovating. From its early days as a chemical company to its current status as a pharmaceutical powerhouse, Pfizer's history is one of resilience and reinvention. The company has weathered wars, recessions, and industry upheavals, always emerging stronger and more innovative. The market's fear is your opportunity. This is a Warren Buffett-style investment at a steep discount. Buffett has always said to be greedy when others are fearful, and right now fear dominates the narrative around Pfizer. But underneath the noise, the fundamentals are strong and the long-term prospects are bright. If you're a value investor, PFE is a stock you can't ignore. It checks all the boxes: low valuation, strong cash flow, a healthy dividend, and a clear path to future growth. While others focus on the past, value investors look to the future, and Pfizer's future is full of promise. The margin of safety is enormous, and the upside is real. With so much negativity already reflected in the price, the risk of further downside is limited. But if Pfizer delivers on its pipeline and growth initiatives, the potential rewards could be substantial. Don't let negative headlines distract you from the fundamentals. The media loves a dramatic story, but real investors know to look past the noise and focus on what matters: earnings, cash flow, and long-term growth potential. Pfizer is building its next chapter of growth. Get in before the market catches up. The company is investing in new facilities, expanding its research capabilities, and preparing to launch the next wave of blockbuster drugs. This is a company on the move, and the market won't ignore it forever. PFE deserves a spot in any value-focused portfolio. For those willing to look beyond the headlines and focus on fundamentals, Pfizer offers a rare combination of income, stability, and growth potential. Don't miss the chance to own a piece of this undervalued pharmaceutical giant as it gears up for its next era of innovation and success. Finally, let's talk about Merck, ticker MRK, a consistent performer and a true leader in the world of cancer treatment. While some companies make headlines for flashy breakthroughs, Merck has quietly built a reputation for reliability, innovation, and steady growth. It's a company that often flies under the radar, but its impact on healthcare and on investors' portfolios can't be overstated. Their blockbuster drug 𝗗𝗓𝗏 is nothing short of revolutionary. It's transforming cancer care for patients around the globe, offering new hope where there was little before. 𝗗𝗓𝗏's success has propelled Merck to the forefront of oncology, generating tens of billions in annual revenue and becoming a cornerstone of modern cancer therapy. This enormous cash flow doesn't just pad the bottom line, it fuels Merck's relentless investment in research and development, strategic acquisitions, and a steadily growing dividend. This financial flexibility allows Merck to adapt quickly, seize new opportunities, and reward shareholders, making it one of the most shareholder-friendly companies in the sector. Of course, the market is fixated on the so-called 2028 𝗗𝗓𝗏 patent cliff, the year when 𝗗𝗓𝗏's exclusivity is set to expire. But here's what many overlook. Merck's management has been preparing for this moment for years, with a clear-eyed strategy and a long-term vision. They're not just sitting back. Merck is actively developing new drug combinations, working on a subcutaneous version of 𝗗𝗓𝗏 to make treatment more convenient, and expanding into new therapeutic areas like cardiovascular and immunology. These efforts are designed to extend the 𝗗𝗓𝗏 franchise and open up entirely new revenue streams. But Merck's story doesn't end with 𝗗𝗓𝗏. The company's pipeline is deep and diversified. Vaccines like 𝗗𝗏𝗏, which protects against HPV and prevents certain cancers, are global blockbusters in their own right. And Merck's animal health division is a quiet powerhouse, providing stable, growing revenue that helps balance the business. Recent acquisitions, such as Acceleron Pharma, are already adding new growth drivers to the mix. These deals bring in promising new drugs and technologies, reducing Merck's reliance on any single product, and positioning the company for long-term success. Despite all this, Merck trades at a discount to the S&P 500. That's surprising given its superior growth, robust margins, and proven track record. For value-oriented investors, this disconnect between price and potential is a rare opportunity. The market's obsession with the patent cliff has blinded many to Merck's real strengths, its ability to innovate, adapt, and execute. Time and again, Merck has shown it can navigate industry challenges and emerge even stronger. Between now and 2028, Merck is set to generate massive free cash flow, billions that can be reinvested in R&D, used for strategic acquisitions, or returned to shareholders through dividends and buybacks. This financial engine is the fuel for future growth and resilience. Speaking of dividends, Merck's payout is not only solid but growing. For income investors, this provides both a reliable stream of cash and a price floor that helps protect against market volatility. Merck's expertise in oncology and its leadership in animal health are often overlooked, but they're key pillars of the company's long-term strategy. These divisions provide both innovation and stability, making Merck a unique player in the healthcare space. This is a blue-chip compounder you can buy and hold for years, letting compounding work its magic. Merck's steady performance and commitment to innovation make it a cornerstone for any long-term investor. The current price reflects fear, not reality. The market is underestimating Merck's ability to adapt and thrive. Long-term, Merck is positioned for continued success, with multiple growth levers and a management team that knows how to execute. Don't underestimate their R&D and management. Merck has navigated patent cliffs and industry disruptions before, always emerging stronger. Their disciplined approach and forward-thinking culture are major assets. For anyone building a diversified portfolio, Merck is a cornerstone holding. It offers a rare blend of quality, growth, and value, traits that are hard to find in today's market. The market's anxiety is your advantage. Take a closer look at this unsung hero. Merck's story is far from over, and the next chapter could be its most exciting yet. MRK offers quality, growth, and value in one package. For investors seeking stability, innovation, and long-term upside, Merck stands out as a company that delivers on all fronts. There you have it, Novo Nordisk, Pfizer, and Merck, three powerhouse stocks trading at rare discounts. Each offers a unique opportunity: growth, value, and consistency, all overlooked for different reasons. Don't let headlines distract you from the real value in front of you. Want to level up your investing? Check out my Value Stocks Investing Master Course, link in the description. For exclusive tips and real-time alerts, join the Stocks Galore Patreon community. Which of these three stocks do you think has the most upside? Let me know in the comments, and don't forget to like and subscribe. Thanks for watching. See you in the next one.